What's up guys, Kevin Cage here with another crypto update. Hope everyone's doing well, and we're going to run through a bunch in today's video. We're going to kick things off looking at Bitcoin dominance comparing the previous alt seasons. So we're looking at BTCD or Bitcoin dominance over on TradingView on the 3-week time frame. You can also see Bitcoin dominance typically on CoinMarketCap up here. So Bitcoin accounts for 52% of the entire crypto asset class, and Ethereum accounts for 17%. The remaining 30% of this entire asset class accounts for all assets below, including stablecoins. So turning the lights on and looking at the previous two alt seasons in 2017 and then early 2021 when alts went parabolic, we saw a variety of assets do 5, 10, even 50x returns. And if you overlay Bitcoin or go side by side, you'll see every single time Bitcoin dominance has crashed substantially, this led to alts getting all of that volume and that money pushing alts and prices up. And you'll notice the last two alt seasons that we saw, Bitcoin dominance absolutely collapsed and that volume and money left Bitcoin, went to Ethereum, and more of that money flowed into alts. So in early 2017, Bitcoin's dominance of the entire asset class was over 90%. We can see it dropped from 95% all the way down to 35%. This was a 63% crash, and this was one of the biggest super cycles for the alt market in history. Then as the bear market began, we can see Bitcoin dominance starting to recover from 35%, making its way and slowly climbing up to 70%. A few years later, we had history rhyme again. Bitcoin came up to 70%, not the previous high at 95%, so more alts are actually getting more dominance from Bitcoin. As the alt market is still very nascent and getting started, whereas Bitcoin started in 2009, the majority of alts really didn't get going until 2015, 2016, and 2017. We can see the last alt season before the crash, Bitcoin dominance went up to 70% and this time crashed all the way down to 39%, a 44% crash. So the 2017 alt season, we saw a 63% crash. The recent one, we saw a 44% crash. Thus far in this cycle, we can see Bitcoin dominance actually broke through these previous highs, which is great, and it has climbed up to 53%. So assuming Bitcoin dominance doesn't crash as hard as 63% or 44%, even if it's diminishing, going down, say it's a 20% or 25% crash. From this level, a 20%, even 25% crash would actually take us down to those previous lows that we had, the last bottom for last cycle. The question I ask myself is, where will we see Bitcoin dominance top out this cycle before the crash leading to the next alt season? Are we going to push a little higher, even up to 58, maybe 60%, or are we actually going to challenge the previous highs at 70%? Let's hope we see it in 2024. I mean, a crash from here, even taking out that gap, is almost 20%. We can see about 18, 19%, and then all the way back to those lows is 25%. If Bitcoin dominance climbs even higher, up to 58, even 60% from there, that is more room and even a bigger crash and more volume for alts, so it could be a bigger alt season. And here's looking at the crypto asset class excluding Bitcoin, so the altcoin market, when Bitcoin dominance actually collapsed, leading to those massive alt seasons. So early 2017, we saw over a 300x. Next bear market took well over 1,000 days to break into new highs. And as Bitcoin dominance collapsed, we can see we still did over 700%, technically over an 8x. So ideally, the higher Bitcoin dominance goes first before collapsing, the better, because there's more money that can flow into alts. And in the future, if Bitcoin steals the show and sees that 20%, 30% crash in Bitcoin dominance, that could be a substantial move for the altcoin market. Even getting back to those previous highs, it's still less than 200% away, which isn't crazy. Now, before going over some alts, I want to talk about the Bitcoin Historical Volatility Index. Okay, so we have both charts on the weekly time frame. We have Bitcoin and its price history above, and we have below the BVOL or Bitcoin Historical Volatility Index measuring the volatility of Bitcoin. Now, Bitcoin's been around since 2009. This volatility index starts in 2016 on TradingView. And in this volatility index, we can see we went as high as 187, 188. The previous lows were around 13, we can see another big crash down here around 14, and we're actually all the way down there today. And during every single bull run, when Bitcoin, Ether, and a variety of assets draw those parabolas and go parabolic, we can see that the Bitcoin Volatility Index was at the very least above 50. Today we're just under 16, well below 50, sitting on top of the weekly 50 MA. We can see a few bottoms for Bitcoin, including the 2018 bottom right there, and then even March 2020, that actually corresponded with a market top for the Bitcoin Volatility Index here and then here. And also Bitcoin's top in June of 2019 also corresponded with a top in the volatility index there. So we're seeing some level of correlation between tops, bottoms, and bounces with Bitcoin's volatility index. Bottom line, for the most opportunity, I want volatility, I want larger price swings, I don't want Bitcoin trapped in another 200 plus day range just going sideways, I don't want alts sitting at lows, going sideways, or creating new lows. I want more volatility to enter this market so prices can fluctuate. And during previous cycles in bear markets, we did fall below these moving averages, but really got back in, kind of like a game of ping pong in this trading range. So I really just want to see Bitcoin's volatility index start climbing higher and getting back above 50. Okay, before going over some recent news for a variety of assets, let's look at some price charts for some assets that have been performing very well this year. We're seeing several small caps and even micro caps under $100 million market caps doing very well on the weekly time frame. We have assets like Rio. This year alone, we can see has done over 4,000% or over a 40x. Notice in both of these situations, the weekly RSI crosses the middle line or the 50 line and went into overbought where momentum is at an all-time high there, and then also here on this recent move. We're seeing Hello Labs with that new TV show Killer Whales coming out. This is done over a 20x. We're seeing Tara or Terra right here. This thing is done over a 30x this year. And we're seeing other assets like Tower, BitTensor doing very well in the weekly time frame. And the key thing we're seeing is we initially rejected that middle line, came back down, consolidated a bit longer before getting the momentum back, going into overbought, and doing that multi 100% move. Nexera or Alliance block, maybe not a crazy percentage or ROI move, but we can see it did go into overbought. But not all assets are pumping. There are other assets that had a similar look and setup, potentially that cup and handle, and they actually crashed and are creating new all-time lows. So I've been looking at a variety of microcaps, some that I think are bottoming out, some get a little pump, and then they actually crash to new lows all over again, so just be super careful. And per the last two cycles, remember, we didn't see the largest moves for the altcoin market or the highest majority of assets until Bitcoin was officially pushing into a new all-time high price. H-bar went sideways, up, down for over 100 days, while Bitcoin is pushing into a new all-time high price and H-bar didn't do anything. And just like in previous videos when we overlaid Bitcoin with different assets including H-bar and looking at the performance, H-bar finally got that pop, and when it did, as Bitcoin is pushing into an all-time high price, the ROI was substantially larger than anything Bitcoin could do. Especially if you consider its cycle low versus Bitcoin cycle low, Bitcoin is around 20x and H-bars was 60x. So if you believe this asset class is here to stay and Bitcoin pushes into an all-time high price, that is the move that I'm looking for, and I expect to see alts have the greatest ROI. Alright, next up, some recent news for alts, and I also want to talk about trading volume in the crypto asset class. So we have from OMFIF, the Digital Monetary Institute. They're pleased to announce that Ripple the company will be partnering with the Future of Payments report for 2023. So we know OMFIF is huge. This is an independent think tank for central banking, economic policy, and public investment, we can see, with investable assets of $43 trillion at the heart of this network. And we know that Ripple the company has spoken at their annual event the last couple of years alongside a variety of groups, central banks like France, Brazil, the BIS right there. And we have James Walls, the VP for Ripple for central bank engagements. And previous symposium partners included a variety of organizations, even Algorand, side by side with Accenture, Microsoft, Meta, Swift, Visa, etc. Also, keep tabs on Travelex Bank. This is a Brazilian bank that we've spoken about last year, and they use ODL or on-demand liquidity. Ripple just put out a 3-minute video of the executive VP for Travelex Bank highlighting Ripple and their payments expansion. And the Brazilian corridor is massive for payments and remittances. Hundreds of billions of dollars in payments are sent into Brazil each year. And Travelex Bank was the first exclusive foreign exchange bank approved and regulated by the Central Bank of Brazil. Focused on electronic foreign exchange transactions, the Forex market is a multi-trillion-dollar market per day. Now here's a quick clip of Navin Gupta of Ripple that's shared by Crypto Eddie, just highlighting how big Dubai is, even with the VARA approval of XRP to be used.
Joining me here, we have Navin, who is the Managing Director for the MENA region, Middle East and North Africa for Ripple. How are you?
Very good. Thank you very much for having me. It's a pleasure to be here. The reason Silicon Valley happened, because we had entrepreneurs, we had investments, and we had enabling regulations. And that's the reason Silicon Valley, which is the birthplace of the top 5 firms in the world. Yeah. Exactly the same momentum today we have in the UAE as well. You have enabling regulation with somebody like VARA. The CEO spoke in the morning. You have builders here in the room who are building companies. And then you have investment available with number of sovereign funds and then many VC firms which are here. And this combination is powerful exactly to create a Silicon Valley for the crypto industry.
So you say that Dubai could be the next Silicon Valley? Is that what I'm hearing?
Yes, 100%. At least for the crypto industry, for blockchain, Dubai currently is and will continue to be the Silicon Valley. Middle East, in fact, as a region, is 2 or 3 times bigger than the largest remittance market in the world, that's United States, right? In fact, I would personally think at some point, we would have global brands from the Middle East in remittance business itself, and it's not too far away.
Okay, so that has been the biggest use case so far for Ripple clients, you would say, remittances, cross-border payments?
So that's been the biggest use case, but the other use case that's coming up is custody.
Okay, so a few very important things that he says. We're going to talk about custody as well. The Middle East alone is 2 to 3 times bigger than the US remittance market, which is huge and one of the largest in the world. And Dubai is absolutely massive, and we know that Ripple has an office in their district in the DIFC. And earlier this month, with the approval of XRP under the VARA regime, or the Virtual Assets regime, So this is Dubai's Virtual Assets Regulatory Authority. And the DIFC is absolutely massive. Just remember, a 20-year track record, 72 countries, and $8 trillion in GDP, with a combined population of around 3 billion people, a huge chunk of the global population. So pay a lot of attention to a variety of assets and projects that are building relationships in the Middle East. We've shown a lot of connections before for XRP with HBAR, with Toko and DLA Piper, and then Casper. And earlier this month, Dubai's VARA also granted initial approval to the crypto firm WatsPay. So WatsPay has the asset WTK, which is definitely a microcap with a fully diluted market cap of around 30 million. So WatsPay is in their journey to obtaining a virtual asset service provider license for virtual asset services and activities, so VASP or VASP. Now we talk a lot about global adoption of DLT in some of these public protocols, even if it's through a hybrid instance for enterprise adoption in a variety of verticals, supply chain, tokenization of anything, AI, payments, etc. But the key component to get actual adoption is infrastructure and regulatory clarity and legislation. We need custody. We need legal frameworks and infrastructure for custody and holding these digital assets. And we're seeing more custodians becoming qualified custodians as well, which is super important for the future of digital assets if you believe in enterprise adoption. I know there's some Bitcoin maximalists out there like Max Kaiser who thinks that all altcoins are garbage, Ethereum is garbage, and Bitcoin should have 90% or 100% dominance. I personally don't see that. I think Bitcoin is awesome. It gave birth to this asset class, but Ethereum really gave rise to DeFi and essentially the entire altcoin market. And this was super interesting, shared by Fireblocks, one of the biggest in the space. As of March 2023, earlier this year, crypto derivatives commanded a staggering 74.8% share of the entire crypto market's 2.95 trillion trading volume. So crypto derivatives alone accounted for almost 75% of the trading volume. So all of these derivative type trading products are great for bringing volume to markets. Looking at the entire crypto asset class over the past decade, starting at under $1 billion, climbing to $1 billion, climbing to just shy of $1 trillion, and then the previous high at $3 trillion. We're going to see in the future if the crypto asset class can surpass and eclipse the previous highs of $3 trillion. There are other asset classes in existence worth dozens of trillions of dollars like commodities. Other asset classes are well over $100 trillion, global equities like stocks, the global bond market, real estate, and derivatives. So if some of these public protocols assist in tokenization for real-world assets and connect to other industry verticals, we can get a huge slice of that pie and help other asset classes become more efficient and get trillions of dollars into this asset class. Some people think we get to 5 to 8 trillion, other people think we get the dozens of trillions of dollars in the future. Bottom line, looking at a variety of indicators in multiple cycles for the Bitcoin price chart over the past 10 years, notice dark red at every market top with confidence well above 90. Slowly but surely. Next up, shared by MJ Algo, so we can see Algorand on the Alo Explorer had a huge climb in number of transactions and accounts created. So we saw a little pop last week, which is great to see. And if you look at the correlation of developers coming into the market and look at the Ethereum price chart, developers come into the market as prices are going up. During a bear market, when prices crash, a huge number of developers leave until the next cycle. We also had some news for Casper Network. Helix Markets integrates Casper Network. Helix Market, a next-generation decentralized exchange, was awarded a grant from the Casper Accelerate Grant Program, helping bring DeFi access to Casper Network. So on Helix Markets, as we scroll down, we can see that Casper USDC has been added. We can see that Casper will be listed on this exchange called Bitvavo on December 4th, offering a staking reward of 5% if you stake Casper on this exchange. No thanks. We know different exchanges, Coinbase, Bitrue, Uphold, they offer a lot of different staking incentives and staking products, and some of them are actually competitive, but for me, I would much rather just have my assets on-chain in my own wallet, sometimes even directly in cold storage. Same thing for staking Casper at 10 to 11%. You're actually in control of your funds, even if you have your Casper in cold storage using a ledger. If you hold Casper, I definitely recommend going through this report just covering AI. I think it's going to be very significant that IBM chose Casper to use for AI governance with Watson X. All these market estimates of AI, I think, are going to be super conservative, and generative AI alone is going to be one of the biggest market movers we've seen in history, and this will also tie to crypto. A huge percentage of Fortune 500 companies now are actually saying they understand blockchain, which is a big deal, and they're investing into blockchain along with AI. And this was a survey of over 600 global business decision makers in the US, UK, China, and Europe, and we can see 75% or 3 out of 4 reported feeling positive and interested in adopting blockchain for business. And 90% of these organizations plan on investing into AI over the next 12 months. In the top 5 ways organizations use blockchain technology today, working more efficiently with AI, database automation, ensuring security, compliance, and regulatory reporting, and that is why upgradability to some degree is very important to stay compliant. supply chain management and optimization, and then managing copy protection. Also got news that the finance minister of Colombia states that a governmental task force is creating a bill to roll out and regulate a central bank digital currency. Just like Anders shares, remember that Ripple partnered with the Colombian Central Bank Ministry for Blockchain Trials. With Ripple's central bank digital currency platform working together with MasterCard and their huge partner program, I think that's a big deal for the future. Ripple's building the central bank digital currency platform that is interoperable with XRP to use XRP if and only if it is the cheapest payment path. So I don't want CBDCs, but that's where the future is headed. I would like to see Ripple's CBDC platform get as many central banks as possible, get tons of volume, get it going, and have XRP able to connect. And per the previous video, the latest Hedera Governing Council member, this EDF organization, one of the world's largest electricity producers and Europe's largest renewable energy producer, has successfully completed a proof of concept built on Hedera's network that aims to revolutionize and automate the management of renewable certificates. So every multi-year bear market, crypto is a scam to the majority, but these organizations are building with some of the world's largest companies automated real-time renewable energy certificates of proof of concept. So with all of these ESG agendas and pushes, blockchain actually used for sustainability is going to be huge, and there will be a lot of transactions. And last but not least, we have iTrustCapital linked in the top of the YouTube video description. If you use that link to create a free account, you get a $100 funding reward. I've had a Roth IRA with iTrustCapital since 2020, so all of my gains are 100% tax-free. I'm paying 0% capital gains. Worried about the safety of your crypto after death, planning on how to handle these assets after the owner's passing is often overlooked. You can learn more about how you can prevent potential legal disputes and ensure that your loved ones receive their intended share of crypto here. And iTrustCapital is one of the few that leverages a qualified custodian, and assets are held in enterprise-grade storage and cold storage. And cold wallets are kept offline, whereas hot wallets, or a lot of wallets people use, are connected to the internet. Hot wallets are nice because they're easier to access, but they're also more susceptible to cyber attacks. In just discussing asset protection, I think that is so important to look into, especially if you have a large sum of money or you make a killing in future cycles. Setting up proper entities, establishing a trust, getting your will in order is just super important. And back in September, I uploaded a video going over iTrustCapital and 10 huge benefits of a Roth IRA. But alright guys, I hope you enjoyed today's video. Another day waiting as Bitcoin's weekly RSI is overbought where momentum is at a high. Stay tuned for upcoming videos. Huge thank you to all that hit the like button, and until next time.